VanEck launched a Bitcoin futures ETF this week, trading under the ticker XBTF. Now, this comes shortly after the SEC rejected VanEck's spot Bitcoin ETF that would directly track the digital currency. Joining us now is VanEck CEO Jan VanEck. Let's start off, Jan, first with your response to the fact that the SEC continues to deny direct Bitcoin ETFs.
It was sad news last Friday. We've been trying to get a Bitcoin ETF approved since 2017. The logic, it wasn't a surprising decision. The SEC is very clear that they would like some more insight and surveillance into the cash Bitcoin markets, that just having a regulated Bitcoin futures market isn't enough for them. But we're happy to have a Bitcoin fund in the market. I think investors are dramatically underinvested in Bitcoin, both individual investors and institutional investors. So at least happy to have the Bitcoin futures fund in the market.
Yeah, tell us about this futures ETF. There has been some criticism that these just aren't going to be as favorable as ETFs that actually track Bitcoin. What role do they serve? And are there other opportunities down the line to enable investors to do what you were trying to do with your Bitcoin ETF?
Yeah, the main issues is any fund, ETF or mutual fund that invests in futures can see a distortion, meaning performance difference from the spot price. And I think people know that for the oil markets, and the Bitcoin futures markets are no different. If you look at history, when Bitcoin has rallied, investing in the futures has lagged the performance of Bitcoin spot. So we've been very clear with investors that that is unfortunately part of this, the reality of this fund. But I think it's just, as I said, so many people have money in brokerage accounts and want to and need to own more Bitcoin. We're happy to have this fund in the market. So that's basically where we're at. There are also tax consequences that we think our fund is structured a little bit better than the other funds that are out there, but that's it would take a half an hour to explain that, and I won't get into it here.
Yeah, we can definitely go down a rabbit hole, Jan. I wonder, we've talked a lot about sort of central bank scrutiny of crypto in general. Lately, there's been warnings about it being used long-term as a destabilizing tool against government. We've done some work on quantum computing and whether encryption is at risk long-term. I wonder how you think investors should absorb existential questions about the utility of this asset.
Well, listen, I really differentiate Bitcoin from other digital assets. Bitcoin, I think, really is part of your inflation protection trade. I know there's lots of conversation. Is the Fed behind the curve? Whatever kind of inflation cycle we're in one now. And I think in this cycle, it's different in a couple of respects. One of which is you have to, if you're owning gold, you have to own some Bitcoin as well. But I think, and Bitcoin is very imperious to government kind of banning and control. We saw that when China kicked out the miners this year, the network, basically recovered without much of a problem. What we're talking to investors about as well, though, is what we call smart contracts, protocols, things like Ethereum, and that is showing dramatic growth. What I like to ask people for their Thanksgiving Day dinner conversations for the crypto skeptics is, how much economic value has traded on the Ethereum blockchain this year? And the answer is $3.5 trillion. And that tends to change the tenor of the conversation. They're just databases, but they're very powerful databases.